Hey everyone, how you doing? This is Steve Peterson, broker owner of Infinity Investments, and we have a very special guest today, Chris Bentley, who is the CEO of Bellatorum Resources, which is a company that's got 28 million under management, focusing on mineral rights and royalties. So, welcome, Chris. Thanks a lot for joining us today.
Thanks for having me, Stephen. Appreciate it.
Well, let's jump right into it. So, for most of our viewers, we're a real estate investment YouTube station and organization. Um, m- some of us may know what mineral rights and royalties are, but why don't you explain to us, to all those who may not know, what exactly that is?
Yeah, definitely. It's unique to the United States. I think maybe a small portion of Canada, but it's really unique to United States property rights. And so it's real estate. It is subsurface real estate. So a lot of times, especially in areas where there's proven oil and gas reserves and activity, the mineral rights have been severed from the surface. So
Ah,
it's pretty rare to find properties, especially in oil and gas areas where they're productive, where when you buy the surface, you're also getting the mineral rights, but it is possible. So it's it's the subsurface, and the reason it's called mineral rights is, typically when they were mining before they were mining for minerals, it's gold, silver, copper, coal, etc. But
yeah.
the oil, we buy mineral rights now, and we get a share of the production. So typically anywhere from 12.5 to 25% of the oil and gas that comes out of the ground, we get our share of that in revenue from the operator. And so if you compare it to commercial real estate, let's say Exxon, for example, was the one drilling the wells, they would be our tenant. So we're the landlord.
Got it.
Exxon's our tenant, and instead of a fixed monthly rental, it's pro rata share of the production that comes
Wow.
out of the ground.
Oh, okay. So you kind of share in the risks and successes, if you will, of the company that's doing the drilling, for lack of better word.
Well, actually, I'm glad you asked that question in that way, because we don't share in the risk.
Ah,
It's
okay.
there's no liability. We don't have to pay any cost. If that the only risk is the productivity of the well, right? So if the well
Got it.
is not a great well, then that means our revenue goes down. Commodity price, if the commodity price is down, then our revenue's down during that time. But the upside to that is, or I shouldn't say the upside, but if you're comparing to, again, real estate where you have a tenant, if your
Yeah.
tenant goes bankrupt, he's not going to pay his rent, right?
Right. Right.
But and then so you have occupancy downtime, no revenue coming in. That's
Yeah.
not the way it works. Unless the well gets plugged and abandoned, which is usually not the case in the areas we're buying. We're buying in very proven, prolific areas such as the Permian Basin in West Texas, where if the operator that's operating the wells and producing the oil and gas starts to have problems, usually a bigger player comes in and just takes over the asset, and so the cash flow is uninterrupted.
Yeah.
So,
Absolutely.
so
That's a good way. Hey, that's a great way of breaking that down. And that's actually, so really, you're more participating in the success, but kind of hedging the risk, if you will, and not you're not taking a big loss if things are down, or if the driller, or like say the tenant, if you will. Now, is that what you call them? Do you call them tenants? Like if Exxon's drilling, is there a different language for that?
Well, I mean, that's the actual legal term for it, right? We have a lease agreement. The mineral rights owner has executive rights, and we sign a lease. Now, I'm breaking it down to the very beginning of the asset class, right? And whoever had
Right.
those mineral rights before there was ever an oil or gas well on the property is the one that negotiated that lease and signed it and started collecting checks. What we do is we're actually out buying from those guys, and
Got
we're
it.
just acquiring all these assets and bundling them up and taking ownership and collecting cash flow, right? So for us, the
Very
upside
interesting.
is increase in volume, commodity price, and when I mean volume, it could happen either with recompleting existing wells and making them more productive, or drilling new wells. You can
All
fit
right.
multiple wells on these properties, and so usually we'll buy them where they only have one or two wells and they can fit, several more. And so that's kind of the name of our game. It's a and when you say like loss, there's really no loss of capital risk here.
Yeah.
It is a let me put my phone on do not disturb. Sorry about that.
No, it's all good.
Um, so the cost of acquiring the asset is our only cost, right? And then we just start collecting cash flow. So there's a very good yield, free cash flow component to the asset class. And again, the assets we're buying, I'm not saying all mineral rights, but
Yeah.
what we target, they're almost perpetual cash flow components. So, it's more of a time value of money risk rather than a loss of capital risk. So,
Gotcha. Okay, I see what you're saying.
yeah.
Man, it makes sense. It makes sense. And now, most of us are familiar with oil. Are there other significant minerals or mineral rights out there that you guys, acquire or play ball in that space with?
So we do natural gas, so oil and natural gas. That's it for us. We only buy in Texas, but technically you can have mineral rights all over the country. There's coal mines, and the mineral rights owners, get their share of that. There's I've heard of other types of mining activities where the mineral rights owner gets, to participate in the revenues produced from the mining activity.
Yeah.
But we're just in oil and natural gas.
So, and you mentioned something earlier. Thanks for breaking that down. Because a lot of property. This is new for a lot of people, and I wanted to get this information with you out there, because now I think is a time for everybody to expand their reach, expand their understanding, particularly within real estate. And what are your thoughts on now? And I'm not an expert at all, like with oil and commodities and oil prices. I've heard that the oil prices dropped a lot. Does that, and like for instance, a lot of my investors, when the type of guys I work with, when the prices drop in real estate, that's when they get excited. I work with a lot of contrarian investors who like to buy properties in a down market. I started my company in '09, when the market was down. So a lot of guys are kind of licking their chops and so forth. And I'm telling them, okay, there's going to be some opportunities, but again, I'm telling people, let's be smart about it. Let's be diligent about it. I do think there's going to be opportunities in commercial real estate within your market and what you're seeing. Are you guys kind of, are your eyes big thinking, hey man, this may be a great opportunity? Are you, or what's your kind of thoughts on where your market's at and where it's going?
No, absolutely. There's opportunity. This is a kind of an illiquid asset class, right?
Yeah.
So the mineral owners that we're buying from don't have a lot of liquidity options. There's no Zillow of mineral rights. There's no,
Yeah.
you don't go hire a Remax agent to list your property
Right.
and you've got people coming to look at it. There are a few auction sites out there that we can list them on the web, but for the most part, it's us making unsolicited offers. Now, we have seen an increase in this price right now for people wanting liquidity, and yes. So and we are contrarian as well. We to answer your question directly, we think now is the best time to buy. I
Yeah.
want to give you an example of like how this is real estate, and one of the reasons that I wanted that when the Family Office Club said, hey, would you like to meet with Steven? I was like, yeah, because this is real estate. What we're doing, we 1031 exchange. We've
Wow.
done 1031 exchange deals where the mineral rights owners sold us their mineral rights. We used a qualified intermediary,
Wow.
and they used the proceeds from selling their mineral rights to us to buy commercial real estate. And then vice versa, we've seen where on the
Wow.
exit of like bundling up the package and selling the package of mineral rights, you could 1031 into an apartment building or an office building, retail space, etc. And so we kind of, I don't know this if this is common in the real estate world, but we refer to property rights as a bundle of sticks. You've got surface rights, you've got air, wind rights, solar rights, and mineral rights. And so we're just dealing with one of those sticks in the bundle, and it happens that you can sever them out and sell them, and separate the mineral rights from the surface, and that's what we're doing. So it is something that I think real estate investors should have in their portfolio.
Absolutely. Well, absolutely. Especially, I think when folks are looking at diversifying, and a lot of people, it's attached to real estate, right? So it's something that they can understand, and I think that a lot of my clients are, also invest in the stock market, and people are like, well, I just invest because it's a good thing to do. I don't necessarily understand that so much, and so I know a lot of guys are buying gold and silver and tangible things because they understand tangible stuff. And so this seems like something. And now people are always looking for opportunities, and people think, okay, well, maybe I can get in at a good price point. And it seems like, but for investors, and tell me if I'm right or wrong, it looks like folks that invest with you are, kind of looking for cash flow or income type generated investments. Is that seemingly what it looks like? It's a good move to invest with you guys is for cash flow. Is that right?
Yeah, it's illiquid, that's the downside of it, but it's cash flow. I mean, we're distributing, we have royalty income coming every month, and we distribute that pro rata to our investors. Opportunistically, we'll sell some properties if we can make a gain, on what we buy for, and we'll distribute those profits as well. But yeah, I mean, it's an illiquid investment vehicle. You got your money locked up, but it's just free cash flow. It's yield, and it's relatively low risk. People always tend to think that energy is high risk. We're on a much lower risk side of all investments, I would say, because of at least in Bellatorum's model, because we're buying proven. We're not out speculating, hey, buying mineral rights that don't have existing production. So there's already free cash flow. And the other thing, I mean, we just ran a model on our existing portfolio. Oil's down, close to $20 a barrel. And if we just held on to our portfolio, it'll yield 4% per year. So that's not amazing. That's not a big, win, but that's at the low end, right? We're at $20 a barrel, and we're making 4% per annum for our investors. I mean, that's not a bad day. And for us, we're in our bad day, right? We're in the valley right now. So, that was good for us to do that financial modeling and see, hey, look, being in the valley actually isn't that bad. Now, I'm not going to say all oil and gas investments are like that, or every mineral rights portfolio would perform that way. But what we're doing with our strategy, I think, is, it's pretty unique and protected from the downside.
So you're basically saying, hey, at the worst part of the cycle, we're still earning 4%. We're not losing. We're actually earning 4%. Now, let me ask you this question, because it seems as though, again, I'm not an expert, but the demand for oil has gone down as a result of this, the COVID-19. Whenever we do get back to business as usual, it would seem to me, as a novice, just a guy who's out here, that there's probably going to be an immediate spike in demand, because all these people who are out on the road, like I'm in the Bay Area, right? If I was driving yesterday on the freeway at 5 o'clock, no traffic. Right. It was like the Twilight Zone or something, right? When we get back, that'll be, from my house in Oakland Hills to downtown, no traffic's 10 minutes. When the traffic's back, that's a 45-minute drive, right? So I'm imagining, ships, planes are flying, ships are sailing, people are back on the road. There's got to be at least a rebirth of that demand. Do you think at that point in time you'll see a spike in prices, or just a gradual increase?
I think it'll be gradual this time, because we have had globally, there's been more production than demand. Uh,
Yeah. Yeah.
and, that was from geopolitical issues such as the OPEC cartel,
Yeah.
trying to get U.S. shale kind of to trying to hurt us. But
Yeah.
luckily, we're resilient and and we're way more efficient, and our economy as a whole is not tied to oil as much as those OPEC nations. So
Yeah.
um, it'll come back, but I do think it'll be gradual. Usually, I would say it would be a V-shaped recovery. What you were referring to, yes, the demand's going to increase, but we have so much stored in
Yeah.
reserve right
Okay.
now
Yeah.
that's
Right.
not getting used. We're going to have to use that up, and that'll take a while. But you know, hydrocarbons, whether you like them or not, if you're anti oil and gas, really, there's just the facts are is that 80% of energy, actually a little more, comes from hydrocarbons, and it's going to be that way for the foreseeable future. I mean, the
Yeah.
renewables just aren't efficient enough at generating our energy requirements. I mean, almost everything we consume comes from energy that's produced by hydrocarbons. So even electric cars, the electricity that charges them up is produced by natural gas.
Yeah.
So
Yeah. Yeah. Yeah, it's interesting, right? And
yeah.
so you mentioned that you guys buy in Texas, pretty much focusing on Texas. Do you are you there indefinitely? Do you see are there other states that you might be looking into, or you just wanting to deal? I mean, it's a huge state, right? And that's oil country. So I
Right.
mean, are also football country? I'm a big football person, so always I watch a lot of actually high school Texas high school videos and stuff like that. It's football land as well. So I mean, are you sticking in Texas? Are you looking at other markets as well, or what's your thoughts on that?
We are sticking to Texas for a while. There are other productive areas in the United States with oil and gas production. I mean, even California has a lot of oil
Yeah,
production,
yeah,
but we only buy in Texas for several reasons. The best oil and gas plays in the country are in Texas. I mean, that's just a
yeah,
fact. The Permian Basin, the Eagle Ford Shale, the Barnett Shale, the Haynesville. These are all prolific fields that have a lot of life left in them. And so, but another key thing is the property rights here are
yeah.
different than around the rest of the country. They're way more favorable to the mineral rights owner. So
Mm.
kind of a unique thing about not to bore you or your audience
Oh,
here,
oh.
but property rights laws in the United States generally come from three different European laws, right? You've got English common law, you've got French law, and Spanish law. And our Texas has its origins in Spanish law. Formerly being part of Mexico, which was granted by the King of Spain, and
Oh,
so our property rights are just more favorable. And then lastly,
interesting.
the tax laws here in Texas. We don't form as a Delaware limited partnership or anything. We're a Texas limited partnership.
Yeah,
The vehicle that we have our investors in and that we hold the assets in, and that's because it's very favorable from a tax standpoint. And basically the investors just collect income, and it's a very tax efficient state to operate within.
right. My understanding there's not state income tax. Is that correct in Texas?
That's true. Yes.
That
Now, I mean,
works.
we do have investors around the country, and they have to pay um, whatever their state income tax is, right? But what what you don't have to do, and every state's different, but there are scenarios where investors who invest in states, they end up paying two state income tax, right? They have to
Right.
pay New York and California or whatever. And
Yeah,
so
that's tough.
luckily our investors that are in New York don't have to also pay any Texas taxes.
Gotcha.
So yeah.
Gotcha. Yeah, if you got to pay New York and California taxes, it's like, man, I might not even
You
made the
bet.
profit, right? Because they
Yeah.
they got it all, man. That's it's a great part of this Golden State. I love it. It's home, but man, the tax man and the state of California is way more aggressive on collecting taxes than the IRS, by the way. And
I've
anybody out
heard.
here, knows that it's just the weather that keeps us here, man. It's that's
Oh, I would. if you guys had a different, I would live there. When I was in the Marine Corps, I was stationed in Southern California,
That was beautiful.
Camp Pendleton, and
Okay, yeah.
it was beautiful. I miss it. I was out in California in February, and it was right before the whole lockdown thing. Literally, I flew home, and the next day I saw on the news that California's governor had shut it down. So
yeah, man, you got right in time, man.
Yeah, but it is beautiful out there. But man, I got
right in time. And I mean, and it's an interesting perspective, and I wanted to. I thought that this would be relevant as a lot of real estate investors are figuring out which way is up, right? And you said something that I think was profound. I just did an interview with Ron Ricard from IPX 1031. We're talking about the 1031 exchange extensions, right?
Yeah.
So you said something that stuck out to me. I think will stick out to a lot of real estate people is that you could 1031 out of your rights and buy commercial real estate, or 1031 out of your real estate and buy the rights. That is very intriguing. And I know in like 1031, for instance, you sell out $1 million property, you got to take that gain and you got to at least buy $1 million worth of property and you follow the rules and stuff like that. Is that the same kind of scenario for the mineral rights? If you're selling, you got to roll up at least what you sold out of and then some?
Yeah, it's just like this. It works exactly the same, and it's funny you bring up IPX 1031. We've worked with them. One of their principals actually wrote a book specifically about 1031 exchanging into oil and gas royalties.
Yeah.
So I mean, yeah, it works just like it would in any other 1031. You go through the qualified intermediary, and you don't pay your capital gains as long as you roll those into another property. And that other property could be, I think that's where a lot of people get mixed up is they think they take that term like kind and they think it literally means apples to apples, that you have to go from apartment building to apartment building.
Right.
And that's not the case. You can, as long as it's real property to real property, then whatever that real property is, that's up to you.
Well, and then I have all the time that question. Hey, I got this house. I want to buy an apartment. Is that okay? Or I got this apartment. I'm trying to buy some raw land. And we just got to. I mean, from sophisticated people, we just got to break it down to them, right? And so for you guys, what's interesting, like you said, there's not a Zillow for the mineral rights, right?
Right.
How do you come up with value for one of your sites or one of your projects? Is it a factor of the income that it produces, or what's your mechanism for evaluating, one of these deals?
It just depends on where it's located, right? But it is scientific. We have a petroleum geologist and reservoir engineer on staff here. We have landmen that run the title and do all the work and the valuations. But, there's what's called PUD value, and then PDP, which is PDP is proven, developed, producing. And so there's that component of it, right? And that's based on cash flow, like you said. But to get deals done in the Permian especially, you got to pay a little extra to take ownership, because everybody knows there's a lifetime of reserves in the ground.
Yeah.
So you add what's called the PUD value, which is proven but undeveloped. So you remember how I mentioned that there's room for more wells on the property.
Yeah.
So like we do, just generally speaking here, let's say, the existing wells will produce 1 million barrels. And so we know if they drilled, 6 more wells, it'd be 6 million more barrels, and so we can discount that in the future, bring a present value, and then make an offer that way. So that's what we do in essence. But I think, back on what you're saying, this, and what I really want to get a message out there is this asset class is perfect for the big time real estate investor who uses the 1031 mechanism.
Yeah.
Because this is a place to park your cash in cash flowing assets, where if you're still trying to, now look, the risk you take, I'm not saying it's a risk-free deal, because if you don't want to own the asset for a long time and then you need to sell it when you're ready to buy another commercial real estate development project,
Yeah.
and you're hoping to use that money to get in there, then that might, give you some challenges at that time. But if you just need a place to park money, I've seen so many people 1031 into just a goat pasture. It's not
Right.
making any income for them, and they did it just so that they didn't have to pay capital gains. Well, why not 1031 into a portfolio of mineral interest that has income coming in every month?
That's
There's
the thing.
there's no leaky faucets to fix. There's no landlord. Like, it's the truest form of mailbox money
Yeah.
in America, in my opinion. Like, you just collect your royalty checks, and you don't have to be. Once a company like ours has taken the assets ownership and gotten them all organized and done all the due diligence to acquire them, we can wrap them up in a bow and deed them into whatever investors coming in through the 1031. They can own them directly, and all they literally have to do is collect their royalty checks and cash them. It is not an asset class that requires a lot of active management.
Wow. And so it's similar. It sounds similar to like people like a triple net lease property, like a retail property, like somebody buys a Dollar General or they buy a Walgreens, where it's like all you got to do is mailbox money, right? But in what we're seeing in the retail sector, before COVID-19, and retail, for instance, you're taking a little bit of a risk because the whole world is changing how we buy stuff. And I think with this COVID-19, I mean, even more, online retailers are doing much better than, brick and mortar, right? So a lot of investors, especially in California, want to move out of apartments because, a lot of people feel like we've reached a peak. I'm one of those people. Also, a lot of people we've been had rent control in our major cities. Now we have rent control throughout the state. There's an element of rent control throughout the state. Some landlords who are experts know how to navigate through that. A lot of people are fed up, right? And so a lot of people are wanting to sell, but they're like, hey, some folks want to go tackle out of state apartments, which I do believe in, but some people are like, I want some mailbox money, right? But traditionally the play has been, I'm going to sell my apartment in California, I'm going to buy a triple net lease property in Ohio or Texas or North Carolina. People are wary about retail, so it sounds like doing a deal with you guys could be a real good alternative to that in an area where they might be, it sounds like it's a good time to buy in, right? I mean, you guys are making 4% yield in the worst of times, if you will. So imagine what the best of time, or at least a good time, could do, and
Right.
then you can exchange into it. So that's just another, feather in your hat, if you will, if you're an investor, and if you're exchanging out, as a lot of people are, and I think will be, you got to have multiple options, man. I mean, it's just like the quarterback dropping back in the pocket. If you got one receiver in the route, man, and he's covered up. He's covered three out there. You're gonna get sacked, or you're gonna throw an interception. So you got to have route combinations. You got to have multiple options. And I think working with you guys, and I know that's you guys working with Family Office, Richard and those guys, they're doing a great thing, and they seem to be real prepared for you know shifts in the market like what we're seeing right now. And I think, I started my company in '09. I think there's great opportunity now. You just got to be smart about it. That's why I want to try to get as much content out there. Man, thank you. Thank you, Chris, for joining us. If folks want to reach out to you or connect with you, what's the best way for them to go about doing that?
They email me directly, chris@bellatorum.com, or they can call the office here, 832-559-8217. Visit our website, bellatorum.com. And no, it's been a pleasure. Thanks for having me on, Stephen. I really enjoyed the conversation, and best of luck to you. Hope you and your family are doing well and staying safe, man.
Absolutely, man. Right back at you on the family thing. And one last question: where in Texas are you at?
We're right outside of Houston. We're in a little town called Spring. It sounds similar to what we're right outside of Houston. So
Okay, no, I actually I was working on a deal, man, in Spring, Texas. It was 31 condominiums that was part of Like it was Lions Creek
Oh yeah.
condominiums, and there's
Yep.
a big high school, and there's a big high school that's real popular in football out there, right?
Yep.
As you know, so I'm gonna
Fine.
get Klein High School, right?
Yeah.
Okay, okay, man. So all right, man. We got some other things in common. Well, I wish you the best of success. Your family to stay safe and healthy as well. And hey, man, best of success in investing.
Likewise, man. Take care.
You too.
Cheers. Bye.
Bye.